Welcome to ShortView Trading, it's your morning market hit for Wednesday, 3rd of March. What matters today for traders? Well, the market's really at a fascinating juncture at this moment, and a whole bunch of assets are poised at or around key support levels, key levels in terms of their price patterns. Take the S&P 500 for example. It rallied nicely on Monday and yesterday held in at that 61.8% golden ratio retracement level, as you can see in the chart in front of you now. But looked at from a different angle, if you look at the candlestick of the S&P 500, you would argue really quite possibly and plausibly that it's been in a downtrend really since mid-Feb, since those highs we saw on the 16th of Feb. So it's held out nicely in support, has been found at its 50-day moving average, but equally that candlestick looks like it's in a 2-week downtrend that may well extend. So the S&P is poised pretty nicely, and you can interpret the price action either way. But equally, look at some of the big cap tech stocks. For example, look at Facebook hugging its 200-day moving average. That price action looks pretty troubling. It looks like it may well be about to break meaningfully to the downside. Or look at the Amazon candlestick chart. Same sort of pattern, again on its 200-day moving average. Or take Tesla, which has given back quite a lot of its gains in the past couple of weeks. Or indeed Bitcoin, which seems slightly unsure as to its direction at the moment. And of course, all of these prices have been influenced by what's been going on in the bond market. As we saw last week, there was a blow-off in bonds, a blow-off in the yield to the upside, with yields moving aggressively throughout February to the upside, squeezing long-duration growth assets, squeezing their ability to move higher, and of course squeezing liquidity to a degree as well, as we've seen with Bitcoin struggling to make continued gains in the last couple of weeks. So a really big piece of this puzzle is where do bonds go? Because where bond yields go and where bonds go will determine to a degree where those big cap tech stocks go and where the Nasdaq goes. And of course, if you look at bonds, they're deeply oversold, and sentiment has shifted aggressively since August last year. August last year, when they were at their yield lows of around 52 basis points on the US 10-year, everyone was bullish bonds. Now, of course, everyone is bearish. So these are contrarian indicators. You want to lean against them. Of course, they don't work day by day. They tend to work more on a week by week and month by month basis. But bonds are oversold and everyone's bearish. And of course, what you want to do is you want to add to that what our models are saying. What are our short-term put to call ratios, the greed and fear models, how overbought, oversold is this market on a 1 to 2 week basis. All of these models we update every day in the daily rag, which is available to subscribers on the website. But one model I wanted to show you today was the percentage of US stocks that are overbought or oversold. And this model looks at hundreds or even thousands of US single stocks and aggregates the message of their overbought, their individual overbought, oversold indicators to give you one big overall message. And of course, what you can see is this model gets pretty high when markets are a little bit frothy and need to give back some of their gains. But where we are today is we're back at those low buy levels. The frothiness has come out of the single stock names. This suggests the market is warming up to move higher once again. This is an encouraging sign. So to see how we're playing this, our actual recommendation on a 1 to 2 week basis on equity index futures, and all of our models, as I mentioned, the put to call ratios, the fear and greed models, the VIX volatility models, a whole suite of models that we put up each and every day. Please see today's daily rag. That's available to subscribers via the website, as I mentioned. But equally, if you're not a subscriber and you'd like a 7-day free trial, simply click on the link below, sign up via the website. All you need to put in is your name and your email address, no credit card details required, and we'll send you the daily rag for free for 7 days. Or equally, if you like what you see, please sign up via the website. It's $49 a month. Cancelable at any time, nothing further to pay. So what are we watching today? Well, there's a ton of macro data out today. Some of the key features I think will be ISM, non-manufacturing, the service sector side of the economy. That'll be watched closely. That's a key data point. Added to that, of course, we've got PMIs across the globe for the service sector been coming out in Asia overnight, in Europe this morning, and some of the North American ones this afternoon. And then it's the beige book later on. Also ADP employment out of the States is sort of early heads up on where the payrolls may well go on Friday. And added to that, we've of course got the UK budget today, where we'll get a flavour for how that consolidation of public finances may happen further into the future. And of course, a big sense of how much more support is going to be given to the economy in the near term. So that's it from us. That's your morning market here for Wednesday, 3rd of March. Thank you for listening. Please do subscribe to these free daily videos available on YouTube. Simply search under ShortView Trading, or follow us on Twitter, LinkedIn, and or Facebook. Thank you for listening. Stay safe. Trade well.